So, welcome everyone. As I said, my name's Serena. I am a GP based in London, and I'm joined today by the lovely Hannah, and we often tag team to do these webinars. Hannah is a specialist tax advisor, and she works with a lot of GPs. So let's go. Yeah, so this webinar is essentially looking at smart tax tips for GPs. And we've done it in a timely way because a lot of you will have a certain size tax bill, which is due imminently. And we do a lot of these financial webinars, lots of different types of webinars actually, to help GPs kind of stay on track, be a bit more financially empowered and a bit more knowledgeable about how best to work as self-employed GPs. So a little bit about me and about Matt, who is in the other room, probably sorting the kids out that were running riot, my kids, 5 minutes ago. So essentially, we're both GPs based in London, and we set up My Locum Manager a number of years ago now. And it works as a software, a financial software, where GPs add all their kind of locum work, their appraisal work, anything that needs to be invoiced or pensioned. We have a lot of limited companies that use our site to track all their income. And not only do we really streamline admin in a very user-friendly way, but we do lots of GP support. And as part of that, these webinars are part of it. And the way the webinars run, for those of you that haven't joined us before, is we do some key information shared on the presentation. You can post your questions in the chat box at any time, and then we finish with a live Q&A. And we have had already so many questions sent through to the pros that usually sign up to the webinars. So I've got quite a few questions in already, which I'll start with, but by all means post yours. What we're going to try and aim for is like a 20-minute thing covering the basics about tax, expenses, talking about the things you can claim, and then go straight into the Q&A. And try for once to finish on time, which, Hannah, has not happened to date. We normally, because of all the questions, we tend to overrun, but you know, it's always, we learn a lot. So let's see how it goes. Yeah. So just a bit of housekeeping. If, like what happened before, I get cut out or Hannah gets cut out, just sit tight and Matt will try and do something in the background with some wires, and we usually get back on. We try and always send out a recording of the webinar. So Matt, can you just make sure you press the record button, please? And grab a glass of wine or a coffee or drink or whatever, herbal tea, and chill out and open up your appraisal if you want. And you can always kind of upload anything that you might have learned that might be useful. Great. So I'm now going to, without further, introduce you to Hannah. So Hannah, off you go.
Hi everyone, good to see you here in January, which is a very, very taxing month. So I am Hannah, and I'm a specialist tax accountant, and I've been working with GPs for almost 5 years now. My business is called Exceptional Consultancy, which I set up in February 2014. I'm also the public speaker. I'm the author of the book, Discover Wealth Through Tax. So you can get it from Amazon. It's on Kindle version. When I am not dealing with numbers, when I'm not advising tax, I'm a black belt in Taekwondo. And actually I'm starting the passion project, which is bringing Taekwondo to very busy professionals like doctors and GPs. So which, if you are interested, yeah, be free to grab me. But today we're going to focus on the tax, especially things are related to January self-assessment deadline.
Great. So thank you, Hannah. So a bit about the content today, just to give you a bit of structure. So we're going to explain self-assessment, looking at sole trader versus limited company. Can I just get a show of hands, like how many of you are, I actually might do a poll. How many of you that have signed up are doing working as a sole trader, and how many of you are so LTD versus sole trader? So I'm just going to put that up as a poll, and if you can just, when it comes up, fill it in, because then we can we can get a bit of information on how best to. So if you can see that poll there that's coming up now, how many of you are sole traders and how many of you are limited companies? Oh wow, 70, so it's almost 70-30 split. That's really interesting. So we'll make sure that we cover both bases. One of the common questions that actually I was sent in before this was from people that have been working as a sole trader. So Natasha was one person that sent that in, and she's now on mat leave and she's going to be affected by annualization. So she was saying, is it better that I switch to a limited company, or can I do a bit of both? So we'll be addressing those at the end. Okay, so the other thing we're going to cover is understanding payment on account and deadlines. And another question that we're going to try and address is for people who are taking time out for whatever reason. So you've paid, or you're due a big tax bill, but you're going to take a certain amount of time off. So you won't be earning as much maybe in the next financial year. So what you can do to adjust for that so that you're not stung by a double kind of high tax bill, even though you know that you're going to be decreasing your income for a short while. We're also going to talk about maximizing tax deductible expenses, and a common question that GPs like me often have is kind of, well, our course is actually tax deductible. What about ski CPD? Like, does it exist, or can we make it exist? Are Botox training courses tax deductible? And what can and can't you do and stay within the remit but help reduce your tax liability? Another poll, how many of you are GP parents? I'm just going to do that as a, because this is relevant if you are, I'm just going to do this in, if you're trying to, sorry, I can't talk and write at the same time. How many of you are parents or aware of like tax-free childcare and kind of what you can and can't claim? So if you can see the poll coming up now, just if you give us an idea on whether or not that's relevant for you, that will be really useful. Maybe if you're not a parent now, you're planning to be. So, okay, cool. That's kind of almost 60-40 split. So we're going to talk a little bit about tax-free childcare for limited companies and sole traders. For those of you that aren't parents yet, maybe it will come in handy for when you are, or you can tell one of your mates that may be a GP parent and might benefit from that. Great. So then at the end, we're going to have this live Q&A. So get your questions ready. By all means, just post them on the chat and we'll get ready to get started. So take it away, Hannah.
Okay, thank you. So first of all, it is a self-assessment season, and I still would like to briefly explain self-assessment. Some of you might be the first year doing it. Some of you might have been doing it for a number of years. So it's essentially a system that HMRC uses to collect tax. If you've been salaried the last couple of years, the tax is usually collected automatically from your salaries. If you are, well, if some people get a retirement page and the pension paid out, or the savings, then it's a certain amount of tax was deducted automatically from the pay. And people and businesses with other income will need to report it in the tax return. Other income, things like if you are the sole trader GP, and of course that's something you need to declare. Or if you have a property, or if you sold a property, that you have if you have a capital gain. So these are the things that need to be declared in the self-assessment. Okay, so normally I like to explain this in a slightly different way, but it's more understandable. If you do familiar with the Rich Dad Poor Dad, the 4 cash flow quadrant, so that's from that. So we have 4 types of main source of income, how people earn the income. So on the left-hand side, we have employee, and down underneath, we have self-employed. And right-hand side, we have businesses or limited companies, or we have investors. So these are four main type of earned income. So as we see, if we look at employment, majority of the employees, your taxes are collected automatically before you get paid. So that's why when you're salaried, the chances are you are not required to fill a self-assessment. But if you have any other source of income from any other quadrant, so that means you have any other income that are not, the tax is not automatically collected. So that's when you need to fill in the self-assessment. So as BI, you will need to do the self-assessment. And for E, there are exceptions. Things like you need to, if your income, salaried income is over 100K for the year, then you will need to do the self-assessment as well. So for all these quadrants, of course, there are small exceptions in each of the quadrants, but for the general map, this gives you the general map that who needs to fill in a self-assessment. So in general, SBI, all three quadrants, these are the ones need to do the self-assessment. And the employment, unless your income is over 100K, or if you have a child benefit, then you will need to do the self-assessment. Okay, so I think limited company and sole trader, these are the things that are very commonly asked by GPs. Like from what Serena has done, like in the pool, that you have a combination we have combination of a sole trader and limited company tonight on the webinar. So just briefly on the distinctions of these two. So if you have the sole trader slash partnership, so what you need, of course, every year you need to fill in a self-assessment. Your income, whatever income you earn from a sole trader business, then that's your personal income. That means that will go with your income tax threshold, and then you will also trigger national insurance as well. And also, but bear in mind that if you have sole trader income, you're taxed on the profit, not on the gross income. So that's why claiming the expenses and maximizing the expenses is very important, but we will address maximizing the expenses later on. So it's slightly higher tax because the personal income tax bracket is slightly higher than the limited company. But then you have a lot less administrative burden. And also, I know a lot of GPs use this as a sole trader because of the pension consideration. So yes, it's not the end of the world that you want to stay as a sole trader, filling a self-assessment, paying the national insurance, but still have the pension. So it's not say one is better than the other, but it really depends on the circumstances. Like a limited company, yes, it's slightly more tax efficient. Like company tax is only 19% at the moment, and also you can take advantage of withdrawing salary and dividends as long as you withdraw the money in the tax efficient way. Then chances are it's more tax efficient as overall for you to run. So in our previous webinar or in my book, I do have a full illustration on like when it's beneficial to incorporate the company. So today we just touch base on the basics. We are not going to go into very in depth on this. But if you do need anything, any further resources, any case studies, either my book Discover Wealth Through Tax, or our previous webinar or some of my YouTube videos, we will address that. Of course, we will address again in more details in the future webinars.
Yeah, I think we're planning a dedicated webinar on this, sole trader versus limited company, in the coming weeks. So if you have specific questions about it, or if you're like, yes, that will definitely help you, then just message us and we'll make sure that we alert you so that you know when it's coming.
Yeah, absolutely. So of course, company overall, it's more tax efficient. But then, there's more administrative burden. Like company itself is a separate entity. You benefit from the limited liability, but it just the company itself is like a taxpayer. Company has to file the financial statements every year to the company's house, and you need to submit the company tax return. And as a director of the company, because your dividend income is the kind of income that is not, the tax is not collected automatically, so you will need to do your own self-assessment as well. I suppose some of you are limited company owners. It might be also the time that you have to do the self-assessment, complete the self-assessment for your personal tax. Okay, so what needs to be submitted? So this slide is really to give an overview what informations that need to put in the self-assessment. So I give this list based on what are commonly, like the clients I have dealt with, what are the things that are usually required. First of all, if you have any salary of any kind, you will have a P60 or P45. So you will have a piece of paper indicating your income for the year and the tax deducted. And for most of the medical professionals, you would have some like employment expenses, things like your GMC, your indemnity, some necessary courses. So I called it employment expenses. So these are the expenses you can claim against your employment income, but then it's more limited than you operating as a sole trader. If you are the sole trader GP, means you're self-employed, then your local income and tax deductible expenses are required. So if you are using My Local Manager, then you've been updating your records, so that'll be relatively easy for you at the tax season because everything is up to date, and then the figures you can submit the figures to the accountant to complete the tax return for you. And of course, if you've been filling a pension form, yes, please don't forget this as well. So in general, these are for self-employed. Here I put tax deductible expenses. I put a mark in there because it's very important that you do make sure all the claimable expenses are there. Sometimes even you can go, there's no harm when you are doing your records. There's no harm. You can put a little bit beyond that. Say, for instance, you're working from home. You might want to put some of the utilities. And then the accountant, when he or she sees it, the accountant will be notified and will claim accordingly, either by the proportion or according to your own circumstances. So for your own records, there's no harm you prepare a little bit more so that you can really maximize that.
So Hannah, that's also things like, so if you're a salary GP and you're also locuming on top, then don't forget to track all, you can claim a proportion of your say your car costs or your utilities, or if you've bought a laptop or your phone bill as a proportion of the amount you're locuming. And obviously, if you're a locum, don't forget those everyday things, because they do, stamps, printer cartridges. I'll probably sound really tight and like I collect everything, but I do now. But you can also, like, on My Local Manager, you can take pictures of, like, all receipts and things, so it will track everything for you. But like printer cartridges, all these things rack up to hundreds and hundreds of pounds a year. So if you're a salary GP and you're locuming, or you're a sole trader as a locum, don't forget about all the everyday things that you're using that may come in, be able to be expensed.
Yeah, absolutely. Like the phone bill, use at home, your stationery. So don't forget this. Yeah, if you are locum from a limited company, so of course your salary, whatever salary, you have a P60 from your limited company, but also the details of your dividends, what's your dividend income from your company. These are needed to put through the tax return. Other sort of income that very, very commonly see are like rental income. So if you have a buy-to-let property, so you would need the detail on that. If you have any investment, stocks and shares, make sure it's not in the ISA wrapper. Of course, if you're started to invest like stocks and shares, you want to try it out. In the stocks and shares, ISA will be really good because it's in the tax-free environment. But if you do have anything outside of that, so you will need to put in the self-assessment. And if you sold a house or sold some shares in your investment, then it will trigger capital gain. So these are need to be considered. And the tax reliefs, things can potentially help you to reduce tax burden, charitable donations. Make sure it's really donating to the charity. So I remember one of the example was a client made a donation to both charity and also nowadays Facebook have this birthday fund. So if that's to the individual, not a registered charity, so these are not tax relief. But make sure it's a proper charity that you donated to. Private pension contribution, if you have made any contribution out of your own pocket, so don't forget that as well. Tax efficient investment. So these are quite juicy parts. I think investment part, like tax efficient investment, we have also been planning to do a dedicated webinar on this. So things like
definitely. I think lots of people have asked what kind of tax efficient investments can they look at. So we'll definitely organise that as well in the coming.
Yeah. These are things like you invest in the certain type of company, and then you get, say, you invest £10,000, you get £3,000 back from the government. So this type of investment. We will definitely do dedicated webinar on this, analyzing the pros and cons and risks. But these are the tax reliefs.
I'll just do a poll and see how many people would find that helpful.
Yeah, absolutely. I think especially for the GPs, like first of all, salary, if you're purely salaried, and if you're earning 100K, 150K or plus, then this can be beneficial. Also, if you are like a sole trader and then you are very, very profitable, and this can also help as well. But there are risks involved. Okay, so other considerations, other details, if you have been claiming child benefits, and if you're earning like one of you, the parents earning more than 50K, then make sure you need to declare how much child benefits you have, because it will trigger the high income child benefit charge. And also, if you are still paying student loan, make sure you put that into the tax return so it can be consolidated.
Some people have asked in the lead up to the webinar about, so they're working as a sole trader, as a locum, and they've also set up a limited company that they're running in parallel. So for their child tax relief, is it a sum of both? Because I am assuming they're running both because they're trying to reduce their tax threshold. So for example, if you're going to earn, I don't know, 110K as a sole trader, rather than doing it all through a sole trader, they're doing maybe 30% of that as a limited company and the rest as a sole trader. For the tax relief for child benefit, do they have to declare both the limited company and sole trader, or because a limited company is separate to them, can they just declare the sole trader and claim the benefit at the income of the sole trader?
Okay, so yeah, good question. So because a limited company is a separate thing, a separate entity, so it will, whatever money earned through the company, it will go through the company tax return. So it's not going to be in your personal tax return. Only if you have withdrawn extra dividends or extra salary, then that added up to your own personal income. But if you're not withdrawing anything, your only personal income is only from the sole trader, then only sole trader. Yeah.
Okay, thanks. Thanks, Hannah.
Okay, so this gives you some information on the tax threshold. I take through from 16, 17, 17, 18, and 18, 19. So at the moment, for this upcoming 31st of January deadline, we're dealing with 17, 18 tax return. So the allowance, let's say 17, 18, the first 11,500, that is tax-free. And then this basic rate. So by the way, this zero, this is actually is from how to code it. That's from the taxable amount. So it's actually from 11,500 to when you an additional 33,500 plus 11,500. So that's actually 45,000. That's 20%. So this 0 to 33,500 is actually the amount beyond 11,500. Hopefully that's understandable. If that needs to, yeah, okay, good. Yeah, that makes sense. And then high rate until 150K, that is 40%, and then additional rate is 45%. So yeah, that's the tax threshold. Of course, now the tax year we are in at the moment is 18-19. It's all the same logic. Every year this will change a little bit, but the logic of deciding the tax bracket will be the same. Okay, so normally when you do the tax return, if you're filling the self-assessment online, even if you're doing yourself using the HMRC tool, so your income, your tax, it will be automatically populated. That will save you the headache of having to break them down into different brackets and calculate. But good to have some information. Okay, so let's go through some key deadlines. For the sole trader, as we see, we have every year you will need to do a self-assessment once a year. The online filing is 31st of January. Now we are filing the 17-18 tax return by 31st of January 2019. And for the tax year we are in at the moment, which is 18-19, is by 31st of January 2020. So paper filing, although it's not very popular at the moment, is 31st of October. And the registration, we would always advise by the beginning of October, you will need to register. Like if you started, if that's the first year, you will need to register by October, beginning of October, because the registration take a bit of time, and you will need a registration to go through for the HMRC to assign you a 10-digit number. Then you are able to do the self-assessment. So if you started, for instance, from like August 2018, you started doing locum, working as a sole trader, and you know it's going to be consistent, then by the beginning of October, you should already register self-assessment. This is a very, very soft deadline, by the way, because you might be only starting like, November after that. So it's not always the case, but make sure you do register in time. When it comes to paying taxes, so the payment deadline is the same, 31st of January, but be aware of there's a second payment on account that will apply to most of the sole traders. We will cover this in more details in the separate slides today. So we will cover it today. So don't worry. I know these payment on account is one of the tricky topic for a lot of the sole trader GPs. So it would always, the kind of money to set aside from the gross income. We would say about 25%, especially your first year. When we were talking about the second payment on account, you will know why. The first year, you will need to be a bit more aware of how much you actually need to pay. So when we are going through the second payment on account, you will know why you need to budget it in time. Okay, so for the company, as we see, it's more complicated because you have it's a separate entity. So company, it requires a confirmation statement, which is a snapshot of confirming who are the directors, what are the registered address, who are the shareholders. So it's normally the 14 days after your company's anniversary. So it's required once a year. And company accounts, which is a financial statement, which takes longer to prepare because you need all the income and expenses figures. So the government gives you 9 months time to prepare for it. So 9 months after the financial year end. The company tax, corporation tax, payment deadline is the same is the same time you are submitting your company accounts. But the corporation tax submission, the paper, the form, that means you submitting the corporation tax form. That's actually 12 months after the financial year end. So it's like the government, they expect you to pay 3 months before you submit the form. But normally for us, when we help the clients to dealing with all these things, we do them all in one go, just to reduce any complication, make sure everything is on time, unless something happened, prevent us from submitting the corporation tax the same time. But in majority of the cases, we would do everything the same time to avoid any complication. Okay, so now payment on account, as we discussed, this is it can be quite tricky, and you explained why, especially the first year, you will need to budget a bit more carefully. So if more than 20% of your income are paid to you without deducting tax. So earlier we said your salary, when you earn the salary, your tax is already deducted. But if more than majority of your income is earned that without deducting tax, a very typical example is you being a sole trader. So a payment on account is required. That means you are required to pay the next year's tax bill in advance in 2 installments. One is 50% of it by 31st of January, and the other one is by 31st of July. So if you are the first year being a sole trader, then not just you have to pay this year's tax bill, but you have to pay by 31st of January, you have to pay half of next year's tax bill on top of it. So you pay double the tax, but then it's just a 1/2 paid by 31st of January and another 50% paid by 31st of July. So it can hit your cash flow quite a bit if that's the case.
Can you pay in installments or direct debit?
Yes, you can set up a direct debit. So when it comes to installments, what exactly you mean?
So I meant as a direct debit. So could you pay, like say you've spent all that money and you owe the tax man, can you actually pay it over the course of a year?
Okay, so if that's the case, of course,
I think there's a charge for it, isn't there?
Sorry?
I think they charge you, there's a percent, like for a standing order or direct debit. Is there an additional charge?
Well, there will be interest.
Interest.
So, yeah, there will be interest. So if that's the case, for instance, someone who cannot fulfill the deadline, like cannot pay in full by 31st of January, the amount he or she is supposed to pay, then there's a separate helpline in HMRC you need to call. Actually, if we are, I can actually include that helpline if that's useful. There's a separate helpline that you need to call that helpline to tell them you are not able to meet the deadline in full, and then you are agreeing some additional arrangement. But again, if that's the case, the interest will be charged on the outstanding balance.
Okay, great. Thank you.
Okay, so let's give you an illustration on the payment on account to help you to understand more. Dr. Sam, so he's a salary GP in 17-18 tax year. His salary was 30,000, and then his tax is 3,700. So I round up this figure actually to make it simple. So this 3,700 tax is already taken by PAYE. And also on top of that, he operated as a sole trader. So that sole trader income is 30K. So 30K is his profit, not the gross income, okay? So here is a profit. And then by calculation, the tax from additional tax from the sole trader income is 9,000. So I didn't include any NI, but in reality, NI need to be included. I round up the figure to make it simple for the illustration purpose. Okay, so his payment on account, because 3,700 he already paid, but additional 9,000 he need to pay. So the government, the taxman, assumed that his situation will be the same. He was still paying 9,000. He will still own 9,000 next year. So government expect him to pay 9,000 plus 4,500 by 31st of January. So the first installment, and then another 4,500 by 31st of July. These are 2019. Okay, so as this is the first year he is self-employed, his tax payments are 13,500 by 31st of January 2019 and 4,500 by 31st of July. So it's not just the tax you have to pay, but also some tax bill in advance, paying towards the next year's tax bill. So that is why if you are first year, you need to be aware of this and need to be budgeted. Like the payment on account need to be considered. Okay, so continue this illustration. What will happen in the following year? So I break into two scenarios. First scenario is Dr. Sam will continue working the same way he works and the same level of income. So 30K salary, 30K sole trader. So imagine his liability is still 9,000 for the 18-19. Although if that's exactly the same, the tax bill will not be exactly the same because of the tax threshold change. But here we make it simple for illustration. So he's still additional tax still 9,000 because previously he has already paid 2 installments, like this payment on account in advance. So this will be, he will not pay that 9,000 this year because he already paid. But the HMRC would still expect him to pay 4,500 by 31st of January and another 4,500 by 31st of July. That will contribute to the following tax year. So if he already paid previously, let's get back to previous slides. So here, if he already paid towards 18-19 tax year, so these and these will, these 4,500 and these 2 payments contribute to 1920 tax year. So contribute to the next tax year. However, if he stops working as a locum GP the following year, so imagine he get back to being purely salaried, so he wouldn't have this additional tax liability because everything will be deducted automatically by PAYE. So the following year, he's not going to do the payment on account. He's not required to pay the payment on account. So if he knows already when he was doing 17, 18 tax year, he can actually claim a reduction on the payment on account so that he doesn't have to pay this much tax. He only have to pay 9,000, so he doesn't have to pay any payment on account. If he already know that the next tax year he will stop working like this.
So that's the same as well, Hannah, if people are or have gone on maternity leave, because they would have already paid next year's tax in advance, like part of next year's tax in advance. Yeah. But if they're working as a locum and then they're going on maternity leave, they technically may have overpaid. Yeah. So it's worth speaking to their accountant, because that's what happened to me, and I got about £4,000 or near £5,000 back, which came in handy over my mat leave. Yeah. But also, if you're reducing your sessions, so some GPs, they might find that they're going over their pension threshold, so they think, okay, for the next 6 months I'm going to reduce. So just let your accountant know, because you may be due back some money because of that as well. So it's worthwhile flagging that up. Okay, great. Let's
yes, absolutely.
Questions, yeah.
Okay, so now let's look at the expenses. By the way, one of the ways payment on account can be quite painful. One of the ways, of course, flag your accountant that any situation change, because you might be either can be able to get a refund from the taxman, or you can claim the reduction on payment on account. And secondly, make sure you do maximize your tax deductible expenses, so that this payment will help reduce this tax payment. Okay, so the typical expenses, like your professional subscriptions, your indemnity, your courses, conferences, I don't think you have any problem with it. We will talk about the training courses in a bit, because this can be a bit juicy, depends on the courses you do. Use of home, you can claim a proportion of it. By the way, even if you are purely employed, and if you are required to work from home, you can still claim a certain amount of use of home. So there's a simple method. You can claim a flat rate, so like £4 per week. So that's a minimum. If you don't have any record, but if you know you are required to do some work from home, and if that's not significant amount, then you can say the £4 a week is very reasonable, but it still is something. And don't forget your phone bill if you do use your phone for work. And also travel mileage. And if you go work somewhere, you stay overnight, your subsistence, your accommodation, these need to be considered. And if you buy any laptop, any printers, tools, equipment, like iPad for work, then make sure you do consider this as well. So these are very typical, but then there are, of course, other additions, depends on the scenario.
So Hannah, could I just ask you that? So Sue has asked a couple of questions, which is based around this. So I thought I'd just try and raise it now, because while the slide's up. So she's asking, is there a material difference in the amount of tax paid if you claim an expense under or around £1,000? So for example, computer, mobile phone or handset, as an allowable expense versus claiming it under the annual investment allowance?
Okay, that's a good question. So can I understand if you are operating as a sole trader or if you're a limited company?
Sue, could you just message if you, so Sue SE, if you just write whether you're a sole trader or limited company, then we can address that. Or maybe if you do it as both, Hannah, while we're waiting.
Okay. So normally for sole trader, this simple method. Basically, you just put everything as expense, and everything is claimable, and everything is claimed, deduct your taxable income. So for sole trader, you can use like a simple method. But for the company, because these are assets, like a laptop, if you buy the laptop, say like £1,000, it's an asset. That's gonna be capital allowance. But by all means, say if you invested £1,000 on the laptop, which is for work, then by all means, these £1,000 is all in both scenarios. These are both claimable, the full £1,000. It's just in a slightly different way. I hope that explains that's understandable.
Okay, so essentially, in both ways, it's claimable. You just log your receipts and log it as an expense and send it to your accountant so they can deduct it essentially.
Yeah, they can decide what's the correct way to declare it.
Okay, great. Thanks. Yeah. Thanks, Hannah. Okay.
So now we have this expense claim. So these are the a bit juicy part. CPD retreat. It's actually some of the things that some things I think that was provided by Serena. Some common asked questions or type of courses that people ask.
Yeah, so I got a lot of questions ahead of the webinar from people with these questions. So they were like, can I organize a ski CPD event? Is that tax deductible? What about I'm feeling burnt out, or I want to invest in a resilience course or mindfulness course because I'm really stressed out with my job? Like, can that be an expense? And others were saying they really want to diversify as portfolio GPs. So some of them had an interest in moving into the private sector. So they said, well, if I do a Botox course, for example, is that then tax deductible? And others were saying they wanted to, do joint injection courses or dermatology or minor surgery courses. Where did that stand as an expense? Because a lot of these are extremely expensive, like, from hundreds of pounds to a few £1,000s sometimes.
Mm-hmm.
And then the other questions that we had were from GPs that had that were thinking of leaving the career actually, and they were saying, "Listen, there's a career course that I want to attend, which might help me stay in the profession, but it costs X amount." There was another GP who wanted to do functional medicine as an additional course, and she was just saying, "I just think I want to do this, and if I do it and I can add it on to my current work, then I'll probably stay in general practice, but otherwise I'm going to look to leave." Is that a tax deductible expense? And other people just wanted to work on self-improvement, which happens in pretty much every other sector. You can go and do courses on self-improvement, making yourself better in different ways. So those were the questions really that led to this slide.
Okay, got it. Okay, so when it comes to deciding tax deductible or not, for the business purpose, because you operate as sole trader or limited company, it's essentially like you are running a business. So all these things, deductible expenses, need to have a commercial reason, and also it needs to be necessary, or maybe something that is for the health and safety reason, which is also very, very necessary. Okay, so let's start from the ski CPD. So that was actually the scenario very interesting scenario. Just give you an equivalent example, like it's actually happened for myself in my business, and also some other acquaintances, like business associates, what they apply in their business. So we had this business mentor, and then we decided that we go on the retreat together. And then for a weekend, we just hired the accommodation all together. And also we sit down, everyone sit down, and we discuss the business, we discuss business development, and discuss our KPI, the goal next year. So it's really get ourselves out of our own ways. It's in the different environments, we have different perspective. So it's for the business development. And then the intention is really to have a fresh idea, fresh set of goals, so that we're ready to earn more money the next year. So if your ski CPD have a very, very like a similar reason, for instance, you organize it with some other colleagues, go away. The intention is that you are getting out of your normal environment. In a different environment, you have a different perspective that essentially help you have a different view, and also help you to concentrate better on your CPD. But intention is you develop yourself as a professional, and after this, when you get out from what you get out from your investment is you develop yourself as a profession, and you are able to earn more money when you come back. So you have considered your return, your long-term return on your investment. So that's if there's a commercial reason like this, then these are deductible. But when it comes to like ski CPD, make sure if the element just for entertainment, for instance, if you bring your kids, then they buy the food, that's not relevant for the business. This proportion is not deductible. So that's
yeah, if anyone's got any specific questions about that, then just post on the chat and I'll address them. And what about the other things, Hannah? So what about, if people are doing courses about stress, to target stress or resilience or, mindfulness and stuff as GPs, is that allowable?
Okay, so stress or resilience or mindfulness, again, it's a very interesting topic. And also for me, it's interesting as well. Because, when we say like we are so stressed and then we go on like, say, a meditation retreat, that's more like a personal enjoyment or personal benefit. But for me, what I see this, especially working as a medical professional, I know at this moment, if we argue like this, it might be a little bit pushing the boundary, but I want to address it anyway in my way. So because working as a medical healthcare professional, looking after your own health and well-being is very important. It's just like, so one of the example actually also give you something equivalent. So for some people, if the job itself require a lot of time staring on the screen, then your eye tests are tax deductible because these are for the health and safety reason. So when I see this for healthcare professional, like looking after your own well-being, looking after your own health, there's a health and safety element of it. Of course, if you are the limited company owner or your own business, you can decide on your own term that it's necessary for your business for the health and safety reason. Then when you address that document that in your either a business plan or any of the documents somewhere, then that is tax deductible. So it's really.
Oh, I lost you there, Hannah. Sorry, could you repeat that last bit? Oh dear, Hannah's screen's frozen. She'll be back in a second. She'll just log on. While I'm waiting for her to log on, have any of you actually claimed for any of these expenses? So, for example, Botox courses, or maybe like, oh, hi, Hannah.
I'm back.
You're back. Hello. I was just asking actually whether or not the people that have tuned in for the webinar have claimed for any of these courses or are thinking of claiming for like Botox courses. The other thing I wanted to ask you, Hannah, is, you know, for the stress or resilience, there's a lot of there's like time management for GPs to help us, you know, work better to time. Is that could that be a kind of taxable expense if you're saying it's more for, because often we're being sold it as, look, this is to help you manage your time and your kind of your workload and reduce burnout. So technically I can't think of any other reason why you would do something like that if it wasn't related to your work. So would that be a taxable expense?
Okay, so for time management, again, if you are running, like working as a sole trader or limited company, you can, on your own terms, justify that being able to manage the time better enable you to be more efficient and stress less. So you are able to have more capacity to earn more money or increase your income. So you can justify there is a commercial reason behind, and then that's necessary for you to run the business.
Okay, and then you mentioned about the eye test. So, but what if you have to buy glasses as a result of those eye tests, which, you know, are a good few £100? Can you claim those as an expense?
Okay, so when it comes to eye test, again, because like for this, if your work requires you have a very good eyesight, or like even with the glasses, you need to be able to, you can't be like have a reduced eyesight, or it really need a certain, like there's a requirement on it for you to perform your job. Then yes, that is necessary for you to perform your job.
Okay, and then just before we move on to the next slide, what about things like Botox courses or training courses, like joint injection courses, for example? Where do things stand on those as a taxable expense?
Okay, so in general, if you are doing any courses that contributes to continuous education, these are deductible expenses. But if you are learning a new skill in order to provide a new stream of income, then these are not. So, for instance, like let's just use Botox as example. So, if you are the locum GP, but you're doing your Botox, and the main reason for you to do the Botox is to eventually to have a separate stream of income through your new skill, then the Botox course itself is not a deductible expense, because you are learning a new skill in order to perform in order to earn a new stream of income. But if your intention, so this is a gray area really. If your intention of doing this course is to add on your portfolio to be a better skilled GP, or you are borrowing some of the skills that you learned from Botox to perform your existing job better, then this is considered as a continuous education.
Oh dear, we've lost.
You might lost me again.
You're back.
Okay, I'm back. So what I was saying is, if you are using Botox, like your intention of doing it is saying you can learn new skills, you can borrow some skills from doing Botox course to add on your existing job and to perform your own work better. So that's considered as a continuous education. So that's an expense.
Okay, great, thank you. Should we move on?
Yeah.
Great.
Oh, so that's how we can. That's for Serena.
Yes, Milo Commander. So essentially, if you haven't used it before, you can log all your expenses and it will calculate a lot of your expenses automatically, like your mileage, for example, and your pension contributions and things like that. And you can upload your receipts as well. And what might be really useful for you guys is that there is a pro forma, so the expense list of all the different types of things you should be claiming for. So definitely you can get that on the resources page. So if you go to mylocalmanager.com/resources, there's a tax pro forma there. You just click on that and download it, and it lists everything from your car, petrol, home stuff. So just use that as a checklist before you pay your tax bill in the next couple of weeks, and hopefully that's going to help you all to be a little bit more tax efficient. Okay, Hannah, that's your...
Okay, so tax-free childcare. So I think in the webinars last year, we discussed there's a childcare voucher and tax-free childcare. But the childcare voucher scheme has been closed beginning of October 2018 for the new joiners. If you are considering saving some money in childcare, so tax-free childcare can be one way to help you ease some burden, and then also some to see what's out there. Okay, so tax-free childcare is how it works is the government top up £2 for every £8 you pay for your childcare provider from your online account. So essentially you register online account and then you pay your childcare provider through that account. The government will top up for you up to £2,000 per child per year. So it's per child. But the condition is that both parents has to be working. You can work as an employee or self-employed. So previously, the childcare voucher, if you're a sole trader, you can't use that. That has to be employed. But the childcare voucher, if you have a limited company and you as a director, as an employee, so you can make your own limited company join that scheme. But that's closed in October last year. But if you join before October last year, you can continue using the childcare voucher. It just closed for the new joiners. But essentially, everyone now will be moving on to the tax-free childcare. None of the parents will have, none of the parents' income exceed 100K. Otherwise, you won't be able to use it. And then when you pay for your childcare provider, that has to be approved childcare provider. So they are a list. Actually, there is a link about tax-free childcare, how you can register, and who are the approved childcare providers. So yes, if we are sending these slides out, I can actually include that link. So it's really give you more details on how it works, where to apply for it, and who are the approved childcare providers.
That would be great. Thanks, Hannah. And yeah, we'll send those out to everybody so that they've got it to hand.
Yeah. Okay, so now we can move on to live Q&A.
Are you ready, Hannah? We've got a ton of questions to get through, but they're all really good ones. It's so funny because I love how inventive a lot of our
yeah, hopefully I can still complete some tax returns after the webinar.
Yeah, I need to sort out a few things, but yeah, hopefully you will. So one of the questions that have come in, as a locum, what are the main differences in taxable expenses between someone who's a sole trader and someone who's a limited company? So I guess what they're trying to ask is, can you claim more as a limited company versus a sole trader, or is it the same set of expenses, it's just processed differently?
Okay, so as said, most of the expenses, like the typical ones, these are the same. And things like equipment, computer, these are both claimable but slightly different process. But yes, essentially, as a limited company, you are able to claim a bit more. One example is you, as a director of the company, your salary is tax deductible expense. But if you are operating as a sole trader, you cannot use that. You cannot say you run you take salary for yourself from sole trader business. It's because that sole trader income is already your own personal income. And other things like for the limited company, if you buy the phone, if you say you have a phone contract and you uh, you you buy that phone contract, you subscribe that phone contract under your company name, then you can safely claim the full cost towards your company. That's a tax deductible expense towards your company. But as a sole trader, you do need to consider what are the proportion of work use and personal use. And the same as same as your equipment, laptop, other things. If you buy under your company name, then you can safely claim that these are business use.
So another question is, it's somebody who was working as a full-time partner and now they're working as a locum GP, and they're saying, are there any differences between the expenses that they can claim as a locum than they could as a full-time partner?
Okay, so it's a locum sole trader.
Yeah.
Okay, so well, I think because essentially you as a partner, the structure, the way you run, the way you earn income is still the same. So as said, the most typical one, these are the same. But again, like when you work as a partner, as opposed to working as a locum, there might be some logistics, some like the way you're working might be different. Things like, yeah, you can still claim your travel like mileage and your professional subscriptions. But in general, you as a locum, because it's your own business already, you are in full control. So since something like when it comes to use of home and other things, you are more in control and you have more flexibility. That's in general.
Okay, but what they're logging is going to be the same.
Yeah.
The kinds of things that they're going to be logging.
Yeah.
Okay.
Yeah.
So M. Hewitt is asking, I'm going to be moving to Scotland. Can you let me know, does it work the same in Scotland?
Okay, so
You don't have to go to Scottish law, but I think just a simple, would it be similar or something?
Well, when it comes to Scotland, the logic or the threshold, these are similar, but there are certain differences. Of course, I'm not specializing in Scottish law. I know now there's a in Scotland, something is different. I think if you are moving to Scotland, I do advise, yes, use an accountant who is a local to Scotland and then familiar with what are the changes out there.
Okay. And Adiz is asking, can you share one limited company with other businesses which are non-medical?
Okay, so if I understand that question correctly, that is, you are if you are working as a locum as well as have some other business activity, things like you're doing consultancy, can you use the same company to carry on both trades?
Yeah, I think that's what.
Okay, the answer is yes. So limited company is just like a house, like an entity. You can carry whichever trade you want. In the company's house, you do need to include both activities. So you need to include, one is general practice activity, general medical practice activity. The other one is whatever you're doing, like consultancy or whatever. So you need to do that. The way to declare tax and submitting company tax and taking salary, these are the same as you just working as a limited company locum. But for the business or for the management purpose, for the business purpose, when it comes to you want to know which activity is more profitable, you might need a separate set of records to see like these are the expenses assigned to your local income. These are the expenses attributed to your other business activities.
So you're have records relating to each activity.
Yeah, that's for your own management, for your own analysis. So that's for you to see which one is more profitable or which one like have a better return on your investment.
Yeah. And then Sarah's asking regarding charitable donations. I think this is a really good question, actually. What do you count for items donated to charity shops? Because often they don't really contact you about money. So you've paid for all these items, then you donate them to a charity shop, then they go on and sell them. Can you count those as gift aid?
Okay, so
and then you've ultimately gone on and donated.
So if I understand that correctly, is that you donate the items to the charity shop and then they sell it?
Yeah. So could you claim, so say if I bought, I don't know, £100 worth of clothes and other items, a bag, etc. Then I thought, okay, I'm going to give those to charity now. Is there a proportion? I think that's what Sarah means. Is that, and Sarah, by all means, message and clarify if you're referring to something else. But is because you've donated what you paid £100 for to a charity shop, they then sell them. Can part of that be gift aid? I think that's the question.
Okay, so in general, like charitable donation, it doesn't have to be monetary. So if you donate goods, but then if you say you paid £100 for certain goods and you donate to charity, that item might diminish, like the value might depreciate. So really need to evaluate if that's still worth £100. It might worth £80 when you donate to the charity. So it's really determining what's the value you have donated to the charity. But it works the same when it comes to the goods and whether that's monetary or not.
Okay. And Well's asking about cars and expenses for cars. So he's saying, does that mean mileage or car maintenance costs? So for car, because there's a number of things with cars. So isn't there something if you're buying an electric car, you get some kind of additional tax relief? I don't know if that works for hybrid cars as well, but also what are the car costs? So on the Performer Well that I've posted a link for, you'll see on there things like MOT and all these other bits. I think car cleaning you can claim for, Hannah. Can you claim for things like if you're getting a car cleaned and any other bits for car maintenance?
Okay, so this really depends on you operate as a limited company or sole trader. So for the company, you can say you buy the car under the company name. So any car maintenance, car cleaning, then that's business expense. But be aware of if you use that for both business and personal use, because the personal use element is a taxable benefit. So that's like you get paid extra to your personal income. So be aware of the taxes. But in general, like a hybrid car or electric car or low emission car, that can be more tax efficient to put through the company. It's just like the overall tax saving or tax efficiency. But if you work as a sole trader, or if you just say you put the car under your personal name, but also use for business, then claim the mileage. But the mileage already cover all the petrol and car maintenance and repair.
Yeah, but if you buy a new car, you can claim a proportion of that as well, can't you? So if you bought a new car for work, you can claim that. So the details of that are on that expense performer. Yes. So do take a look.
Essentially, there are two methods, like a proportion or mileage. You choose one. But once you choose one, you cannot change until you buy the new vehicle.
Yeah. So Abu's asking, if as a sole trader you pay someone to do your admin for you and the pay is below the NI threshold, do you need evidence the work they have done?
Yes, you do need the evidence, but again, that's for your own record keeping. You don't need to submit to the taxman with your record. In the self-assessment, all you need is a figure that you believe are tax deductible. But for your own record, you do need this what exactly that person has done or what are the hours. Because actually, I do have example on the client who has got the inquiry. It's just really when you get inquiry from the taxman, sometimes they pick somebody up to say why you are claiming these wages, what are the evidence. So in these cases, you do need to provide this evidence, and these need to demonstrate that these are all for commercial reason.
Okay, brilliant. And you can actually log that on your expenses tab on My Local Manager anyway, so you could just log the hours and describe the work, so you've got a real-time record of that. Loads of people are asking about the limited company versus sole trader webinar. So if you want to be the first people alerted to that, because we always have to cap our attendees for the webinar because of the live Q&A, just make sure you like the My Local Manager Facebook page, because we always post on there first. And once those are filled, that's pretty much it. So if you're keen on attending that, just go like the page and you'll get an alert. Okay, so let's get through these questions. So Majid is asking, how much money do we need to set aside for January 2020 tax return if we are just filing out our first tax return on January 19th? As I heard, it's a lot more. What proportion do we need to set aside?
Okay, so from what I've understood, that's the 18-19 tax return. That's the first year you need a self-assessment for. And well, like very similar to the illustration, like if you are the first year and then you're like sole trader, so about 25% of your gross income, I would suggest to put aside. Yeah, of course, that's like 25 is really the guideline figure. I know everyone is different. The cash flow pattern is different. But in general, yes, 25%. You might start with, say, 20% and eventually go up. So you might adjust that later. But in general, that's the guideline.
Yeah. So Sarah's asking, how do you work out the proportion of your home to claim? It's a good question.
Yeah. So in general, there are two ways. First of all is counting the hours you spend working from home. So if someone works like, say, 10 hours a week from home, then your proportion, you will just calculate they are 168. Oh, why am I dark now? Sorry. Sorry, the lights just go off. Okay, so first of all, it's looking at the hours. So the proportion, like if you work 10 hours a week, then you divide it by the total hours of the week and calculate the percentage. And then secondly, if you have a 3-bedroom and you use one as an office, then you might decide that by the space, the percentage of that room of your house. Oh, Serena, I can't hear you now.
Okay,
yeah,
sorry.
I can. That's okay.
I actually forgot to turn the microphone on. Shame on my face. So Sam is asking, do we need to keep all receipts?
Okay, good question. So the answer is yes, and you need to keep it for 6 years. However, the digital version is fine. So
yeah. So Sam, we've actually introduced on My Local Manager, you can take a picture of the receipts and log the expenses, and then that's it, you're done. So it will keep everything for you, no more pieces of paper flying around. But yeah, just keep them just in case you have a investigation and you need to prove what you're buying. Okay, so I'm going to blitz through the next few questions now. So Ravi, hi Ravi, is saying, if buying, for example, a computer as a sole trader, is it better to spend more on the computer given the fact the money would otherwise have gone towards tax? Ravi, is your other half having issues with you spending on IT? That's what I want to know. So I guess the question is, if that money is going to go to tax, should you just spend a bit more? And, you know, is that worthwhile? I guess it's personal preference. I don't know. What do you think, Hannah?
Yeah, this is really interesting question. In terms of computer, of course, it's more personal preference. If I say this item costs £200 more, essentially you pay, the taxman pay, depending on the threshold, the taxman contribute 20 or to 40% of the cost. But then one thing I would suggest is never do anything for the sole purpose of reducing tax or pushing the boundaries of the tax. If you do need a computer, like a proper one, and require that amount of money, yes, do it. But if you deliberately buy a more expensive computer just for the sake of reducing the taxable income, maybe it's not very necessary.
And that actually answers Tosin's next question, which was, if you're like, how much of a bill can you expect to get back from the HMRC for what your taxable expenses are? And Hannah, you said between was it 20 to 40%, depending on your tax threshold?
Yes, if you are the sole trader, yes. And company it's 19%.
Yeah. So Ian is asking, what do we do if we lose a receipt for equipment bought?
What do you do if
they lose the receipt? Say they bought a laptop,
yeah,
and they expensed it, and then they lose the receipt, and then they have a tax investigation, I guess. What do they do?
Okay, I think for the expensive items, you should be able to contact the supplier to give you another copy of the invoice of the bill. Or if you really lose it and really cannot get another copy, if you spend on your card, on your bank statement should already show that you have paid for it. But ideally, you would need a bill. And then I think for most of the suppliers, if you buy computer or equipment, this kind of thing, you should be able to get another copy of the receipt.
And Angela's saying her husband works as a GP as well and as a locum. Can he count as a colleague? I think, Angela, are you referring to if you're a limited company and then you can have him on as a colleague or something? I think that's what she means. But if it's not, then just message me back and I'll clarify.
Yeah, or as a shareholder, something.
Yeah, or as a shareholder of the company. Yeah. So can you do that then? You can if you've got another colleague as
Yeah, you can. But you will need to consider that, what's a proportion of the share. I suppose if you both are working in the same profession and same amount of hours, you want to divide 50-50. But in that case, none of you will be the controlling party of that business. That's just a bit technical term. Yes, and yes, the allocation of the share, make sure you both are happy with that.
Yeah. So actually, William's just saying that, I'll read it. He says, I pay my wife a salary of £450 per month for helping me with admin, keeping my diary, my local manager, typing up my... So wait, William, your wife logs your stuff on My Local Manager for you, but it's so easy. Typing up my appraisal stuff, etc. Does that seem reasonable?
Well, if that's for the business, if that's like for the commercial reason, yes. So I suppose what your wife is doing, logging your My Local Manager and tidying up your bill, so that free up your time to do what you need to do in order to make more money. So that would be reasonable. But if the bill, if the £450 towards the household thing, then that proportion would not be allowed.
Yeah, and William's also saying, actually, My Local Manager is tax deductible as well. It's like a software locums use, so it's make sure you claim that on your tax. The subscription's automatically added to your expenses anyway. So William's also saying, I have claimed for ski CPD in the past when it was organised by Conference Plus, a group of about 6 GPs. As a group of now 6 GPs, we do our own thing. So we go on a trip to a ski resort together and we each bring at least one topic we've prepared and present it. I have not claimed against this, but some of my colleagues do. Should I claim this? If we ski 6 hours each day and have 2 hours CPD in the evening, would it be reasonable to claim 1/4 of the expenses against tax?
Okay, so first of all, what was the time? When was the time you did that CPD, like ski CPD? First of all, we need to see like how far back is that?
So was it in the last financial year, for example, if you're trying to claim retrospectively, or was it 5 years ago, or is that what you mean, Hannah?
Yeah.
Yeah.
Yeah. So first of all, how far back? Well, chances are if you do need to make like quite a bit of adjustment, you might need to amend your previous tax return or something. The second bit of the question, so if you like ski 6 hours a day and do 2 hours CPD, well, again, you can decide by the proportion of the time you spend on actually CPD and entertainment. So if 1/4 of that, again, you attended the CPD, you know better how many hours or what's a rough boundary, like you spend the time you spend for fun and spend the time for actual CPD. So if that 1/4 you feel that is reality that reflects what you actually done, then that is fine. If that half and half, that is the reality, then that is fine.
So, William, I'm expecting an invite to your next ski trip because it sounds amazing. I guess the point is, if you are organising an event like that with other GPs, then just log realistically the amount of CPD you're doing, what proportion of that trip was based on work. 6 hours skiing, I can just, it takes a lot of time to absorb 2 hours of teaching. So maybe you're just reflecting on.
Justifiable.
Yeah. I'll wait for my email invite for that, William. I think that's brilliant. Okay, Shabs is saying, I'm planning to give around 4K to charity. Can I put that through my business so that I can save on some tax? It's a registered charity.
Okay, so first of all, let's see depends on your sole trader or limited company.
Mm-hmm. So I think it's a limited company.
Okay, if that's a limited company, first of all, you can do like corporate donation, donate under your company, and that's from the corporate and become a tax deductible expense. Mm-hmm. But again, that amount you cannot say make a donation and wipe out your entire taxable income to reach to
it might not reduce the threshold.
Not pay tax at all. That is not allowed.
Okay.
Yeah.
So Obi's asking an interesting question. Can a limited company claim on gym fees for its director? We've got a
Well,
really crazy bunch this time, don't you think, Hannah?
yes, yes. Well, the gym fee, we are working on it. You know, I'm very active. I do gym a lot. I do exercise a lot. I do hope that, you know, these can be tax deductible. But again, you know, if you, first of all, most of the companies, if like for most of the business in general rule, these are not tax deductible because these are more like personal enjoyment and personal benefits.
Yeah.
But certain circumstances, well, for instance, if a fitness trainer, then that person need to be in the gym, need to have a gym. That's necessary to represent a brand. That's necessary for him to be fit. Then that is deductible. The other thing is, you know, if you again reflect back to the health and safety.
Yeah, I mean,
Yeah.
it's good. So to be fair, I mean, I think it's a really good question because as GPs, we're constantly telling our patients exercise is really good for stress
Yes.
reduction. You need to, you know, be exercising X number of times a week to stay healthy. Our jobs involve sitting at a desk. So, you know, I think it is fair. It's, I guess, how you portray it. Okay,
Yes,
so
yes, we will work on it. Yeah, because
yeah,
actually I know, like working with healthcare professionals for 5 years, I know this
yeah.
type of job is stressful.
We get
I
no
know,
perks. We get hardly any perks.
yes,
Yeah.
and I see there was some statistics like I think 1/3 or how many of the healthcare professionals in the UK they actually have they do have mental health, suffer from some level of mental health issue. So I do believe, you know, it's fair. It's a
Mhm.
health for health and safety. Working as a healthcare professional, it's important to look after your own health. You've
Yeah.
been telling patients like looking after their health, but for themselves, for health and safety, these are
Mhm.
important. These are
Okay.
necessary.
So just winding up now, we've got a lot, we've got so many questions. Unfortunately, we're not going to be able to do all of them, but if you have specific ones, just email Hannah if it's about like limited company sole trader stuff, if it's about other stuff, webinars you want to do, or general GP stuff, or you want to try my local manager or whatever, just you can email me. So last few questions. This is from Dania. Can a limited company claim on children's tuition fees? So I guess private school fees.
Oh, private school fee. Well, you probably not able to you know directly pay for the private school fee. Use a company. Um, well, it depends on the situation really. If your kids are old enough and capable enough to actually do something for the company,
Mm-hmm.
and give them a reasonable amount of salary. And then that salary, use that to fund the school fee.
Mm-hmm.
So that's one way you can do. Um, yeah, but
Okay.
yeah, like the school fee planning is also very interesting, very interesting topic.
And how far back can you expense from? So some people are saying that they've just realized they've bought equipment, or they may have gone on a ski CPD last year, or they've bought other things that they haven't expensed for. How far back can you go?
Okay, so in general rule, you can go back last 4 years.
4 years. And Stephanie's asking, can you backdate the payments from the last year into your company, which you've just recently opened?
Okay, so from what I understood is that you recently opened a company, but you had local income last year. And
Mm-hmm.
can you put that back to the company? Well,
Mm.
if that's the case, if that's last year, I don't think that is allowed.
Mm.
That seems like it's a bit pushing the boundary to, you know, like backdate, put the last year's income into this company and to reduce the tax burden. But if that's like, you have the intention to open a company, but you're in process of opening it, and you already started doing the job. It just, you haven't got an entity yet, but your intention is operating the company, then that is okay. But I wouldn't think that can be gone back for like last year. That's a bit far.
Okay, that's good to know. And then, so Layla and a few other people about cars and things, go to the expense perform I sent, just download that. That will list everything. And if you have specific questions about cars, then by all means, you can message Hannah. Arun's asking, what percentage is advisable if you've got a family member as a shareholder in your limited company?
Okay, so depends on what that family member will do. Mm-hmm. So I know in old days, quite a lot of people, they are doing like locum or contracting, and they have a non-working family member, and they put that family member, say 40% shareholder, in order to reduce tax. But now these years, the taxmen, they are tightening the policy. So unless there's a genuine business decision to allocate shares to that family member, and that family member actually contributes to the strategic level of the business. If that's just like artificially put some shares, then that's not allowed.
Yes, I guess if they're legitimately doing something, then yes, of course. Okay.
Yeah, need to be genuine.
Gediminas, I hope I've said that right, hello, is asking, if I'm paying for my daughter's child investment fund, can I claim that?
Your daughter's child investment fund? That's interesting question. Again, you cannot directly say that you use your business to pay for that. Yeah, but if your daughter is old enough and capable enough to reasonably do some work for the business, and you give them the salary, then you use that to fund it.
Okay, and last couple of questions now. So one was a couple of really good ones here. Rupan is asking, so directors of limited company, are they allowed £150 per year towards an Xmas due for the company, towards a Christmas due?
Okay, so you were saying as a limited company director, you were referring the annual dinner, annual function, like £150 per head. Yeah. Okay, so the rule here is that has to be the annual function. Well, Christmas party will fit in that, and that has to be no greater than £150 per head. And also it has to be open to all employees. So if you only have like say two directors, and that's all employees, that's okay. But if you have other people as an employee, but you're not opening to them, that's not.
Okay. And then last question, there was a really good one here. I'm just trying to find it in this massive questions. Hannah, are you able to, while I'm looking for it, could you just put your email address in the chat box? Because there's a couple of people who've got specific questions about property tax and investments and things like that. So you might be able to help them. Okay. There was one last question about, where is it?
Okay, I've just put my email address.
Sorry?
I've just put my email address.
Oh, amazing. So Adil's asking, if you have money saved in your limited company bank account, which you've earned through locum work, can you invest that money as a company investment rather than a personal investment?
Well, for the business, the answer is as a company, you can open a corporate investment account. But there might be certain minimum level or certain requirements. Actually, well, one way is, you might need to speak to a financial advisor about this, see if that sort of investment is for you. When it comes to investment, there's a risk behind. And secondly, some resources I know, I do have a friend, she runs a fund that she actually works with a lot of the healthcare professionals. She runs investment, it's a fund management company. They are trading, I think the minimum level is slightly lower than normal. But if you are interested, just hook up with me, and then I'll be able to talk more and point you to the right direction.
Yeah, and I'm going to just post my email. So if there's specific questions you want answered for the next set of webinars that we're going to do, by all means, message us. So today, just to summarize, again, we've run over, but we always do. But it's like 2 hours of CPD you get. So just on that, sending out CPD certificates tomorrow. I really hope this has been useful for you all. And so far, we've covered things like eye tests, glasses, cars, using your house as an investment, courses, well-being courses, Botox, ski CPD, and William, we're all expecting an invitation to your next ski trip because it sounds awesome. And if you've got a company, different ways that you're going to be able to invest that money, or through charitable donations, maybe be a bit more tax efficient. So thank you all so much for joining us, and like the My Local Manager Facebook page if you want to be notified about the investments webinar and the limited company versus sole trader one that we're going to be organising soon. And if you're a locum GP, then do check out My Local Manager and how it can help you. And Hannah, is there anything else you'd like to add?
Well, first of all, thank you very much for staying till now. And also, like said, like a lot of people asking things like stress release and gym membership, can we claim as a deductible expense? So we're actually working on that. One of the things I'm doing, which is related to my side project, is to raise awareness for healthcare professionals that it's essential for them to look after their own health. In March, I'm putting together, I'm a black belt in Taekwondo. I'm also the part-time instructor. So we are actually bringing martial arts to doctors. Yeah, it's really, there's a mental and physical benefit of martial arts. And also it's an opportunity. I'm combining mindfulness and martial arts. So it's an opportunity for you to really spend the time connected with your body, so that you have a better relationship with your body, looking after yourself first, and then you can look after your patients better. So that's in March, and if you're interested, again, message me, email me.
Oh, brilliant. Thanks so much, guys. You hardcore lots again. So brilliant. But yeah, it was so much fun as usual, and we'll definitely see you at the next one.
Yeah,
Bye.
bye.
Bye.